Hello traders, today is the 25th of February 2013 and the time in London is 10:56 a.m. in New York 5:56 a.m. Good morning to you all. The title of this video is Trading Elliott Wave Like a Cat. At the end of this video, one will be able to understand how to trade Elliott wave more accurately and avoid common Elliott wave mistakes. Well, you also understand how to adopt the mindset of a cat when you are trading. Let's get started. In my life, one of my favorite animals is the cat. I have learned a lot from the cat because it is very intelligent animals, especially when we are talking about trading. There is a lot we can learn from the cat. All right. So the wave principle, we know that an impulsive wave is always followed by another impulsive wave, except in the fifth wave. This is a very, very important information. Let me say this again to you. An impulsive wave is always followed by another impulsive wave, except in the fifth wave. All right? In normal condition, the third wave should be the longest wave. If the third wave is not the longest wave, there is a high chance that the fifth wave will be extended. All right? The first wave, the third wave, and the fifth wave are the impulsive wave which are likely to be extended. Talking about trading like a cat, we want to understand the price because we are looking at the cat, we are looking at the price, like the cat is focusing on the mouse. When we are trading, we want to have a total concentration on the target, total concentration on our plan because the cat is focusing on the plan. The cat is stretching her body, relaxing all her muscles, keeping her eyes on the target. Like a trader, we need to focus, especially when we are about to enter the trade and make a trading decision. At the end of the fifth wave in the uptrend, the market is considered as overbought. Now, this is the time where we need to adopt the mindset of a cat. So you know that I have counted 5 waves, in the uptrend. The price still in a rising channel, not in a horizontal channel. It's an impulsive move. It's a motive wave. Now, the market is considered as overbought. Do you sell? No, you don't sell. You don't sell because you count 5 waves. You do not sell. This is the setup. You only sell when you receive a valid sell signal. Sometimes, as the price reaches the fifth wave, because we are talking about the distribution will take place, the smart money will take time slowly but gradually to liquidate their bullish position. It doesn't happen in one day, so you see the price may go ups and down, ups and down, ups and down, ups and down, and then one time it starts going down big time because distribution will take time. It doesn't happen in one day. Sometimes the price will come down straight away down. When we see the fifth wave extended, and we receive a sell signal, there's a high chance that the price may go down very, very fast. All right? So when we are talking about trading like a cat, we want to understand the price, the market principles, other market participants, and use the trading triangle. Whenever we see a beautiful setup, we do not jump on it because the cat does not jump straight away. As you see in this picture, the cat will take time observing, which means you put a stock on your watch list, you are analyzing it, you want to get it right, You take the right steps like a cat, the right steps, which means you verify the balance sheet, you check the economy condition, you check the economy news, what is likely, to happen, and you position yourself at a low risk point. Now, I've been saying this for some time now. Trader may think that, George, what's happening with you? It's so important because of the way the market is behaving. The market is becoming more volatile, and we have more, smart market participants in the market, talking about the hedge funds. They are very, very smart people and employing a lot of people working for them. You have to understand that the game is becoming more serious, and we need to, be prepared to make excellent decisions. When we see the first wave, ladies and gentlemen, the second wave must not cancel the first wave. Good. Now, As soon as the third wave has begun, ladies and gentlemen, the third wave in normal conditions should repeat the same length of the first wave. That's the minimum requirement if it's truly a third wave. So what we do, we put the length of the first wave, this is the first wave here, we put it on top of a projection of the range of the first wave to the other side, which brings us here. So in fact, we will say to ourselves, okay, if the third wave has begun, we will take profit at this zone. I'm going to put, okay, a turquoise line there. This is about trading like a card, adopting the mindset of professional traders and avoiding mistake or rushing into trade and making the same mistake over and over. One of the problems with traders is that traders will say this is the target zone, this is the fifth wave, we will definitely have this. This will never happen. This is a guarantee. There's nothing like that. You want to draw always a line. So you put your target zone there, and you will manage the trend. Price going up, the price must display high lows, high high. If the price fails to display a new high high, it's a warning. We watch it. We don't want to play with it. We watch it carefully. All right. So price display high lows, high high reaches our target. You see here. You see the candle here. Can you see here this zone? See some traders took profit here. Am I talking to myself right here? All right, you see this candle here. We are on the monthly chart. They took profit here. They understand this. So, price, the third wave is underway. We want the price at least to display, okay, the length, okay, of at least the minimum length of the first wave. So, as the price hits that target zone, if I put it like this, I have a reason why I'm doing this. I will explain it to you later. And you put it here. You see this is a target hit. Okay. You want to take profit or you want to secure your gain. Price break above the target zone, you will give it again the same dimension. You see the blue line, this is my measuring stick. It's about trading like a cat, step by step, without rushing, without assuming anything, understanding the language of the price, that if the price failed to exceed the length of the first wave, in the third wave, we will look for opportunity to sell. All right? Because an impulsive wave is always followed by another impulsive wave, except in the fifth wave. Now, so we will give it the measuring stick and say, okay, give us the same length at least. If it fails to exceed the length of the first wave, it's a weakness. We can, if you receive a signal to sell, we will sell. All right? So price break above the target zone. For instance, here, we will put the same measurement of the first wave right here. And say to it, okay, game on. Give us again the same measurement. And you can see that the price changes direction here, okay, at this point in time. If you go to www.24elliottwaves.com, click on Wave Genius, and you will learn more about this practical Elliott wave trading, or trading like a cat. Trading like a cat is not about being excited about Elliott wave. It's very important when you are a new trader to be excited about Elliott wave because it's a very exciting subject. But apart from that, one must become more mature, which means you want to make money, okay? You don't want to lose. That's the key point. You don't want to lose. You don't want to take into the trade at the wrong place. You don't want to take too much risk. If it doesn't set up, you can walk away. You don't have to, okay, take a trade that is not perfectly set for yourself, okay, which is a high-risk trade. You don't have to, okay? You don't have to. If you know that, okay, something is bought, very often traders know, okay, you know some news is going to mess up your trade, close some, reduce the risk, your exposure, and you will know, in your heart, you know. That's what I'm talking about, using our heart and our head. So you feel bad about it. Okay, why do you feel bad about it? Okay, close it, okay? Or secure your gain, and just, if it's too much, you may decide not to trade at all, and come back another day, and that will be a better decision. So, to summarize, when an impulsive wave is followed by another impulsive wave, we will expect that the new impulsive wave to repeat the length of the previous impulsive wave. If it fails to do that, we will look for opportunity to sell. Here you can see that the price exceeded the target zone. We will give it again the projection on the same target zone. very often you will see that the third area wave, as I explained to trader at www.24 area wave, in the third area wave, we have a high chance that we may see 3 times the length of the first wave if the first wave is not extended, but the third wave is extended. Here you see, I will tell you why, because the third area wave is from here to here. On this chart, trader can perfectly disagree with me because I'm on a monthly chart. But if I switch to the quarterly chart, this is what we are talking about. Okay, using different time frame comparison, you see that the third area wave has started from here all the way here, not from here, because as the price, you can see bullish candle going up when above this level a bit, you can see here. But because of the resistance here, traders were careful. You have to understand what has happened here. Traders were a bit careful here. Acknowledging this resistance level, the price went a bit horizontal, only to continue here. But in fact, the third area wave has started from here because the second wave is a 1, 2, 3 wave. It's a complex second wave, 1, 2, 3. All right. But if we go back again to the monthly chart, all right, where I was looking at this stock. By the way, this is Symantec. All right. If you use computers, you should know Symantec. And Epic SYMC, Sierra Yankee Mike Charlie, okay, American stock. So this is what we are talking about. So the third area we have started here. We will, okay, use the measuring stick of the first wave to project it into the future, step by step and step by step. Usually you will see it 3 times. Sometimes it does not have to, because sometimes the third area wave, okay, is not beautifully extended. Okay, there are reasons for it. Now, you can see here, so we have another impulsive wave, which is the third wave, right here, you see. So, when we see a bullish progression, and then we have an invitation to buy, which is a pullback, and the price start going up, we will say to the price, okay, hopefully, you will display again the same, okay, strength, which means we have this length, this bullish momentum. The strength of the bullish progression, the dominant force, was this red line. As we have an invitation to buy and the price changes direction, which means we receive a signal to buy here, and we are enjoying our swing trade, we will expect the price to display the length of the previous impulsive wave. Here you can see that the price failed to repeat okay, the same size of the previous impulsive wave. We know that we must look for opportunity to sell. As I demonstrated to you here, you see the first wave, which is the first impulsive wave. The second impulsive wave, which in fact has started here, sometime on this chart, you may say from here. As soon as our target is hit, okay, we will secure again or take profit and watch it. If we fail to find a support or to break above the target level of the previous impulsive wave, okay, we will look for opportunity to sell. This is what's happening in the third area wave. In the fifth area wave, my apology to trade, in the fifth area wave. So the third area wave, you see, is a very long progression, dominant for bullish. Price give us a pullback, but price failed to repeat the same length, okay, of the third area wave. There is a high chance that we may see a sell signal here because there is a weakness, okay, in the progression of the price. All right, you see, it's getting weak. That's why it couldn't repeat the same, okay, length. That's what we know. We can use this on any time frame, on the hourly chart, these principles, okay, on any time frame, on the 4-hour chart, on the daily chart, on the weekly chart, on the yearly chart. To summarize trading like a cat, we know that when we have an impulsive wave is always followed by another impulsive wave, except in the fifth wave. If the second impulsive wave failed to exceed the first impulsive wave, we will look for opportunity to sell. But if the price breaks above the range of the first impulsive wave and then find a support, we will look for opportunity to buy. The reason why traders always look for opportunity to sell in the fifth wave is because the third area wave has been extended, but the price failed to exceed, okay, or to duplicate the size of the third area wave. This is a powerful information for traders. As always, new traders has been okay, doing their homework, looking for a lot of information. They go through these stages, which is normal for every trader to go through. You come into the market, you start trading first, you put your money on the table, you are throwing money onto the market, you think you are winning, sometimes you make some money, sometimes you lose, sometimes you give everything back. It's normal, you are learning, and you want to avoid repeating the same mistake. Then you decide to create your own trading system. You start going through all different websites, learning the various trading systems, doing all sorts of things, and suddenly your money is finished or your trading account is wiped out, okay? And then now you know that you have to go back to the drawing board and you want to do it properly, all right? So at this stage, the reason why we put this video like this, these are a market principle that work on every time frame that trader will pay attention to. The price is always going in a rising channel when it's going up, displaying higher lows, higher high. This is true, all right? I will show you one, let's look at this. All right, let's go now to the, okay, this is the pound yen currency pair. I'm going to go now to 3-minute chart, and we want to see what is happening on the 3-minute chart. This principle is true, all right? So I want to show you here the price went down, you see here. So price went down, good, all right? And then the price give a pullback. This is an invitation to sell. We take the length of the previous there, we project it here. Okay, you can see that the price came exactly there, almost, okay? So in fact, I can move by line here, which is good. All right, there is another invitation here to sell. Okay, now we sell, and here the price is not responding anymore. Couldn't display, again, the same size. You see the price displaying double bottom pattern. This is a low risk point. We can sell here with 10 pips, placing our stop loss below the low of this candle. This is not too much risk. If it worked perfectly for us, okay, that's gorgeous. If we are taking out, okay, that's fine. We will close the trade as soon as the price starts going below the previous low. We know that the bearish momentum is progressing. It is not a magic, but it is powerful, and I hope you have found it useful, and we put into use, okay, to trade, okay, like a cat. Until the next time, enjoy yourself and be very happy. We are the GSTWSYS008 traders. Speak to you soon.